Finance Minister Tito Mboweni this week as he will announce government priorities and budget adjustments over the medium term. Focus is expected to be on how government balances the increasing spending pressures against low revenue in a weak economic environment. Government will have to put emphasis on continued fiscal consolidation while reprioritising funds to help kickstart the economy.
Treasury is expected to shed more light on the stimulus package announced by President Ramaphosa. This is expected to stimulate economic growth and create jobs. Growth has disappointed this year, shattering hopes of impressive revenue collection. This is on the back of continued expenditure pressures. All these factors are likely to make the job of newly appointed Finance Minister Tito Mboweni difficult. While the VAT increase will likely boost revenue collection, this will be offset by subdued consumer spending. Economists believe net debt estimates will likely be revised marginally higher.
There's likely to be continued expenditure pressure in a low growth environment. We anticipate that the Finance Minister will continue to focus on areas which require support and aid for the vulnerable in the society of South Africa, but in line with the recently announced economic stimulus and recovery package, so too areas that can stimulate economic growth and certainly to create employment will be examined as well. In the economic stimulus and recovery package, for example, industrial parks are planned for townships, and all of these areas will obviously need fundings and monies, and of course that will be the challenge for the incoming minister.
Economists say Treasury will likely revise growth estimates downwards to about 0.5% this year. The low growth will lead to low revenue collection, which could mean increased debt if government fails to put a lid on rising expenditure. Rating agencies will be watching for signs of fiscal slippage and will see it as negative should the minister announce materially higher public sector debt.
The news that we are going to miss our fiscal targets for this year is going to be negative. But if we look at economic analysis that was done by Moody's, it already expects a fiscal slippage, which means it's already in their calculations. And if you consider that they upgraded South African banks about 3 to 4 weeks ago, it's unlikely that they're going to downgrade the sovereign. As long as next year's fiscal targets are met, it's not going to matter a lot to credit rating agents that this year's fiscal targets are missed slightly, if there are reforms that come that promises to boost economic growth in future years.
With the high unemployment and strained personal finances, hard-pressed South Africans will be hoping for some relief.
Consumers have become increasingly under pressure. Tax increases, fuel price increases, slow growth in employment have meant that South African households have become increasingly cash-strapped. And so it is possible that the mini-budget might contain some measures to provide consumer relief. For example, adding additional products to the list of VAT-exempted products, as well as potential measures to make sure that fuel prices remain under control in coming months. However, both the fiscal package as well as measures for consumer relief will have to remain in a context of continued fiscal consolidation.
State-owned enterprises, finances and governance will also be of significant interest given the risks they pose to the fiscus. Gloria Sifako Musi, SABC News, Johannesburg.